if you're, this was a problem we had with one of our board members in Fresno. He was always looking things up on his computer during the hearing.
Like on the internet?
Yeah, or on his maps.
County is this? Trinity County. Where is that at? That's got to be.
Oh, yeah, I saw the property next door to that, kind of thing.
Good morning.
So what I want, good morning.
Good morning and welcome to the Assessment Appeals Board meeting for November 17th, 2014. My name is Lance Morris. I'll be serving as chairman today in absence of Mr. Ozunian, who is absent. Serving on the panel with me today will be Glenn Fowler and Matthew Graham, which can officially, serve as our board member. He was just sworn in just minutes ago. So we'll first start with board comments. Any comments from the board? Glenn?
Yeah, I had a comment. We had discussed. I've noticed in here a lot of withdrawals from these out of county people, Icegrave and various people. You're doing a lot of these taxpayers an injustice by sending out these cards or letters or whatever, promising them. I don't know if they're promising, but the reduction in taxes. Reviewing these things and going over them by the county assessor's office, and this is an expensive item along with county resources. I think we need to discuss this possible billing of raising that $30 to $100 for out-of-state, not out-of-state, but out-of-county applicants. Try to limit some of this because this they don't show. I doubt if they're here today. Up on this, and they've done the taxpayers an injustice. Most of these people want to review the thing and get this done free. All they have to do is call the assessor's office and they will review it for them. Yet they're charging them $30. I think that $30 should be raised. I know the county of Kings is $100 review and $500 for commercial properties. This is something maybe the board should take up in consideration.
As I mentioned to Mr. Fowler before the meeting, we can certainly research and see what other counties are doing with regard to their Assessment Appeals Board application fee. The fee in Tulare County was set by the Board of Supervisors without any input from the Assessment Appeals Board. There's no specific authorization in the statutes to put in a fee, but there's also no prohibition. The only thing that's actually in the Revenue and Taxation Code is that the form itself has to be provided for free. And so we don't know how hostile the State Board of Equalization would be to an increased fee. At one point, they were very hostile to counties putting in application fees, but the membership on the State Board of Equalization changed, and that kind of push went away. They also lost a case that they filed against a county for having a rule of procedure, which the Constitution specifically allows counties to put in.
Yeah, I know Fresno County doesn't have a fee.
I thought they had put one in.
I just did an assessment appeal the other day. My understanding with these groups is, they're sending out bulk mailers to everybody that has an APN number, and the $30 is simply the fee that the county charges. The fee that the company is charging is based on a percentage of their reduction of their bill. So
50%.
And I think some of them are different. So, yeah. I have yet to see anybody from one of these groups stand before us, and that's the disappointing thing for me is are they really helping? And I don't know how many of those are actually being just discharged, or there's a settlement taking place with the county, or what?
When a reduction is warranted, we certainly do work these out with the agents. But yes, I would tend to agree with Mr. Fowler that it would be nice if something could be done to deter frivolous filings by these out-of-town agents.
Mm-hmm. And
frivolous because all they're doing is looking for their 50%. They don't care about the taxpayer. They care about nothing. $30 if they get 50% of whatever they save them. Well, they can do that for free if they'll call the county. They'll review it, and if there's a savings coming, they will give it to them. But these guys are just fly-by-night. They take up a lot of paperwork, a lot of time, takes up Candace's time. and time is money and resources.
In the office, we say that they're fishing. They are fishing for the county to do their work for them so that they can collect profit. Now, I certainly wouldn't begrudge any private agency an opportunity to make a profit as long as they're willing to work with us and provide information to support the reason why the property is overassessed. But we have difficulty getting them to cooperate much of the time.
I've yet to see a comparable sales analysis come in, or any other kind of analysis come in from these people. What are they warning? They're just taking a shot in the dark.
Right. They're in fact, we discourage them from putting evidence in with their applications, so they're not responsible for providing that to the board until the hearing.
The office has to go back through and review each one of these properties. And again, this is
That's something
guys,
that
a little break.
We'll take a look at it.
you can do a little research, and as
See what
as
other
we have a
counties are
full
doing,
board,
and-
we can
yeah.
maybe discuss
Yeah.
the matter further. Thank you. Okay. Thank you, Glenn. Any other comments from the board? Matthew, anything? Staff? Any comments from staff?
Comments?
We have some new faces. Well, not new faces, but some changes on the for the assessor. Any comments from the assessor?
Mr. Kokendorfer and Ms. Lee are representing the assessor at a conference in San Rafael this week. So Mr. Rosales and I get an
Great.
opportunity to get our feet wet.
Glad to have you.
And actually, the other assessor comment is that we are sad for our sakes to report that Christie, in case you didn't know, did win the election
did see that,
for the
yeah.
Kings County assessor. I forgot all about it, so I didn't even look until I saw these guys walking in this morning.
Yeah.
Like, oh, so I had to ask. And so we will be losing her at some point. I don't know if she'll be here in December, but obviously not after the first Monday in January.
Okay. Any other comments? Looks like we have a pretty short agenda. Let's jump right down to number 10, Robert Van Grau. Somebody here for representing Mr. Van Grau?
Yes, I am.
Okay. Come to the podium, please, yes?
I do that.
State
yes.
your name.
Paul Mulder. I'm the accountant for Robin Grau. I'm from Ontario, California.
Okay. And we need to have you sworn in, as well as the assessor, right?
Yes.
Stand up.
I do.
Please state your name.
Paul Mulder.
Okay.
I
Okay.
had one question. Is this the Elbow Creek Ranch or Dairy? This is the dairy?
Elbow Creek Dairy, yes.
Okay.
Application number 2012-00788, and number 048-070-02700, application number 2012-00789, and number 048-070-03700, application number 2012-00790, application number 2012-00791.
Okay. Mr. Mulder, if we could ask you to just give a brief explanation.
Let me back
Oh, I'm
up
sorry.
for a minute, though. The normal rule is that the assessor has the burden of proof on an escape assessment. However, this appears to be a post-audit appeal, which reopens the entire assessment. And so I would like to know if the applicant is challenging the entire assessment or just the escape.
I would say just the escape, just those items, which is rather lengthy.
So in that case, the assessor should go first.
Okay.
Did you give a copy to the...
Candace, do you want to distribute?
Mr. Rosales, can you just kind of give us a brief
Yes,
overview before we get into the details?
Yes, I could. The applicant, of course, is Robert Van Grau. The assessor's parcel number is 048-070-037-000. The total taxable values on the roll for 2009 lien date are $3,987,280. For 2010, they are $4,057,154. For 2011, they are $3,876,092. And for 2012, they are $3,717,256. The subject property is located at 34537 Road 124 in the city of Visalia. It is a dairy site location and consists of residences, dairy structures, fixed dairy barn, and movable farm equipment. A breakdown of the prior enrolled assessments is included in Exhibit A for your review. The approach to value that we use is the cost approach, which is used to value the trade fixtures and personal property, which is what the applicant is disputing. I'm going to just...
Before we get into all that, is it just to kind of get a general background, an audit was done some...
covering years 2009 through 2012.
The 4 years, okay. And then I'm drawing a blank on the wording. A step-up valuation was done, and so that's what we're discussing then.
Yeah, correct. The taxpayer acquired the property back in 2006.
Okay.
And from my understanding, the applicant booked the assets and divided the cost of the sales price between, of course, structures, land, and dairy barn and movable farm equipment. They're disputing the allocation that was originally applied, and they are basically changing it, amending it, by reducing the original values that they applied to the equipment.
Great. Okay.
And in the audit, we picked up the original cost. And so now the applicant is reducing the cost on certain personal property, not all, but on certain personal property, with the anticipation that we would do a reduction in our costs, thus a value reduction.
Okay, great. Thank you. Sorry, I just wanted to kind of get a general understanding.
They are applying those values and shifting those dollar amounts now to real property. So when they did the amended value changes, the cost changes, the basis changes, they're shifting dollar amounts from personal property to real property.
Okay.
There was a real reduction in 2012 from 2011. What was the differential there?
Where are you seeing that at, Mr. Feller?
On this page right here,
I don't have a copy of that page.
2012 assessments.
Is that the applicant's work papers?
Yes.
Oh, I don't have a copy of that yet.
It went, 2011 was 469,124, and 2012 was 238,940.
That would have been that would have been coming from the audit. There would have been just basically a...
But you lowered the basis is what you did?
No, there was still an escape for 2012. It was just slower than the escape in 2011.
Okay.
Well, let's continue on with your presentation. Sorry.
Okay. The cost approach was used to value the equipment. It estimates the value of an asset or a group of assets as the original or historical cost of the asset or group of assets, adjusted to account for changes in value since purchase and or installation. It is the method of valuation used most frequently to value personal property and business fixtures for assessment purposes because it lends itself to mass appraisal. The assessor is required by law to assess property at fair market value. Section 401.5 of the Revenue and Taxation Code requires that the State Board of Equalization issue to county assessors data related to cost of property and other information to promote uniformity in appraisal practices and in assessed values throughout the state. Equipment index factors are developed for use in mass appraisals and are generally reliable and practical for converting original costs to estimates of reproduction cost or replacement cost new. Index factors are used to adjust a property's original cost for price level changes since the property was acquired. The index factors recommended by the board are updated and distributed annually. Thus, when the original cost of property is multiplied by the board's index factor for the year of acquisition, the product typically approximates current reproduction cost new adjusted for depreciation to arrive at an assessable value. I'm reading from page 3. I'm sorry, I should have probably prefaced that earlier, but just to let you guys know.
Thank you.
The assessor's opinion of value. The assessor audited Robert and Wilhelmina Van Grau through the 2012 year. The audit was complete in March of 2013. The applicant purchased 4 parcels in January of 2006 for a total purchase price of $8,273,031. Included in this purchase is APN 048-070-037, which is the dairy site location. As part of the purchase, the applicant purchased the fixed dairy barn and movable equipment from the prior owner located at 34537 Road 124. The audit recognized $1,368,691 in cost attributable to personal property and dairy trade fixtures from the 2006 purchase. The source of our historical costs derives from the applicant's depreciation schedules. Real property base values for the 4 parcels totaled $6,699,000, leaving a residual basis of $1,574,031 attributable to personal property and trade fixtures. Our recognized audit cost of $1,368,691 for assessable personal property and trade fixtures did not exceed the residual amount. A breakdown of the real property base values and the assessed assets are in Exhibit 2, and in Exhibit B. I'm sorry. If you go to Exhibit B and it's page 10, it gives you basically a summary of the sales price and how much the total base values between the 4 parcels came out to, and it gives you a residual of $1,574,000 up on top. And if you continue on to the next 4 pages, pages 11, 12, 13, and 14, I'm highlighting the base values that were enrolled for the 4 parcels. The base values will be above the arrow you see somewhere in the middle of the page, and those are for the 4 parcels. If you turn to page 15, there's a spreadsheet that gives you a breakdown of the assets that we enrolled in the audit, and there's an original cost, and that original cost is the basis that the applicant applied to the equipment that was purchased back in 2006 from the prior owner of the dairy. The amended column is the reduction that the applicant is basically applying to the fixed assets and the personal property that they acquired back in 2006. And the third column is the difference column. It shows you the difference or the reduction in basis that the applicant is applying. And the very last column, reduction cost request, is the request that the applicant is appealing or wants us to recognize per the appeal. Page 12 gives you a summary of the totals. Do you guys have any questions on the spreadsheet? And if you guys, I could probably answer them right now.
So the original column was what they originally stated when they purchased the property in 2006, attributable to the personal property.
Correct.
1.3 million, and the other we had a residual of 1.7. So there's a slight discrepancy there for something else there, a couple $100,000 or so.
If you look at page 16, it's showing you where those dollar amounts are being shifted to. Asset number 140 in the middle of the page.
Oh, okay.
They're increasing the amount of cost that's attributable to the dairy pasture. They increased it by $120,000, and the milking barn, they increased that by $170,000. So they're shifting dollar amounts from personal property and trade fixtures to real property. They also increased the amounts for South Lock stanchions, which is considered real property, from $787,925 to $926,769.
So overall, there's no requested reduction overall between personal property and real property.
No, because the dollar amounts are just being shifted around.
Shifted around.
Yeah. If you turn to page 17, pages 17 through pages 20 shows you the items within the borders, show you the amounts or the assets that we assessed in the audit, and those are the original amounts that the applicant booked the assets for when they purchased the dairy back in 2006.
So they were booked, but then the taxpayer adjusted them down later, and then you went to do an audit and moved them back to what they were originally stated.
They discovered they after the audit was complete, they became aware that maybe, or they feel that the assets were inappropriately allocated a high cost. And so the adjusted amounts were done in 2013, a year after the audit was complete.
Okay.
So when we did the audit, we went off of the books, which were current, showing the original costs that you see on pages 17 through 20.
Okay. Any questions? So my initial thought, well, we'll wait to hear from the applicant. Just my initial thought is we're basically shifting value from personal property to real property. The personal property would be continued to be depreciated down. I would think their property tax bill might go up in this instance. Is that correct?
Mr. Morris, Section 51.5 of the Revenue Taxation Code actually precludes the assessor from changing those base year values simply because we are out of statute. There's a 4-year limitation to affect real property base year values, and since those values were established in 2006, the assessor does not have the legal authority to adjust those base year values.
Okay. Any other questions on the board? Okay.
My only concern is on the reduction of the base of the assets. The applicant, from what I understand, has not provided an appraisal. During the initial audit, there was not an appraisal done. Per my knowledge, during the sale, I'm not sure who allocated the cost to the assets back in 2006. But even now, for the reduction, there wasn't an appraisal done. It appears that the applicant has just reduced the cost of the assets in half, or for many of the assets in question, and they want us to now recognize that reduction without an appraisal.
Okay. Mr. Mulder, we'll turn it over to you for your comments.
Thank you. Thank you for listening to us and allowing us to come. And yes, we're just asking for to open it up to apply more reasonable values to the equipment, the rolling equipment, et cetera. And that what you brought up, Rick, was exactly right. Is that when Rob purchased the dairy, it was just one lump sum purchase cost, and that cost had to be allocated between land, buildings, equipment, et cetera. And we received a listing of every specific item of equipment. My initial thought was that the values were assigned by the seller, who had the values overstated. But I just see the list of equipment with no values assigned to it. So I also don't know who assigned the values. It potentially could have been our office that was assigning values to land, buildings, equipment all the way across the board. Rob really didn't know about that until the audit and reviewing the audit results, and it was like, oh my word, look at the values on some of these items. And some of these things were not even at the dairy when I purchased them. And I just brought out a few of them. Like a milk receiver pump was valued at $20,000, and Rob says it's closer to $10,000. Milk tank was valued at $75,000, and Rob says a more reasonable value is $37,000. A large tank of $25,000 it was valued at $25,000 based on the list of assets, and Rob says that was taken by the owner. It was not even there. Massey Ferguson loader, it was valued at $60,000. It was junk, sold for $3,000. A Massey Ferguson tractor, 1960 model, was valued at $40,000. He sold it as scrap for $500. International Hydraulic, 1960 model, was valued at $75,000, and he scrapped that for $500. Supreme Feed mixer wagon was valued at $50,000. He sold it to another dairy for $4,000. And then the list, everything is so highly valued. So we come here today asking for more reasonable values to be assigned to those assets. Fact of the matter is, back in 2013, the depreciation schedules have been restated, and the amended tax returns have been filed for the federal and the state to report the new adjusted values based on these more reasonable values. So for the accounting records, we've adjusted them really based on requirement from the auditor as part of the process to say if these are the values, then all the accounting records have to follow them also. So that's our request, just to, if we could have these values to follow the amended as we presented. And in fact, it was only driving up here I thought, we've never, in valuation and in assigning values, rarely do we have equipment, if ever, appraised by some equipment appraiser or something. I thought, driving up here, oh my, that would have been cool had we had that, and that would have been rather extensive because we got 6 pages of a listing of assets. Anyway, that's all my thoughts. That's what I have, and that's what we request.
So amended tax returns have been filed for 2006 through 2013?
Yes.
Did you bring copies of those?
Yes, I sent them to the office back in 2013, and I sent them just last week again. I think Rick received them.
Yes, I did.
Okay. So that was a lot of calculations that were redone then.
Yes. Yes, it was.
Lots of depreciation that went away, and
yeah, part of that was the fact that it took so long during the audit, and we missed the date because we had to go through all of that and revalue it and redo the depreciation schedules and file the amended tax returns based on the request of the auditor. And then the audit was closed, and here we are today.
When you purchased this property, how did you determine the price on these various personal property? Are they given an inventory?
We have a listed inventory of all the items, yes.
Did they put the cost on it at that time?
They did not, just a listing
Now, who
of
put the cost on at that time?
our office, most likely our office
The
did.
office allocated,
Allocated the cost of all the assets, listing all the way down.
and what did they get the cost from?
Well, what we started with is purchase cost, the actual purchase of the
price, yes.
entire.
And then you did your
area.
allocation down based on the personal property, based on
Just a list.
just the list.
Yep.
They pulled that figure out of the air, or did they have something to go from?
Well, the list is everything itemized there. And it says tractor, Massey Ferguson tractor, this, that, tank,
Yes.
milk tank, etc. And without any visual inspection whatsoever, we applied values.
Took the purchase price and applied it to each piece of equipment, came out at the purchase price.
Mm-hmm.
So he should have used the equipment index factors.
That was really my question too, is how the values got assigned at time of purchase.
That would have probably been better.
What's that?
If you have more questions.
Oh, no, that was it. Mr. Fowler covered them.
okay. Any other additional comments from the assessor?
No.
No.
I
Rebuttal?
have one. When you do the cost approach, where does your information come from based on this equipment?
It came from the applicant's depreciation schedules.
Did nobody looked up the value based on what is some of these? I was trying to think on going back into these books and taking the base cost of these things or invoices or something of that nature.
Well, there wouldn't have been an invoice because it was an open market transaction.
Okay.
There was a seller who was, I believe, a prior dairy operator. So there wouldn't have been invoices. So the only source documents we had were the depreciation schedules.
And which they put the value on,
Correct.
which you took your value
Correct.
from.
The applicant had stated that some of the equipment had been disposed, but the equipment that had been disposed was not removed from the depreciation schedule, some of that equipment. So some of the tractors that had been disposed in 2007 or 8, they stayed on the depreciation schedules for all 4 years. So if that was the case, we were never given any documents or proof showing the disposals or the sales of certain equipment.
So one of the dilemmas I'm dealing or struggling with is if we know the initial purchase price.
Yeah,
in 2006.
one big double.
And it needs to be allocated. It's very common transaction, happens all the time. We need to apply values to it. But in this instance, because we've passed the statute of limitations, we would not be able to shift, and correct me if I'm wrong, the value from personal property over to the real property where it is being valued on the depreciation schedules, and after the amended returns and all those things, it would just kind of would vanish. Is that basically what would happen? And
We would be unable to assess the real property at a higher value legally. I would like to add that a real property appraiser did review those allocations when the property was transferred. He was able to support with market data his allocations for the real property values. It was his appraisal judgment that those base year values that were established for real property were market values. So I'm not sure that even if we were within statute, we would have to do a different or a new market analysis to determine whether a higher value could be justified by the market.
Why did we have the reduction in 2012 for 469 to 124?
I would have to review the audit, Mr. Felder.
I would just, because it was 469 down to 238. Reduction.
That results in a decrease from one year's escape to the next, but like I said, I would have to review the audit to determine why that reduction took place.
Basically, what you're asking us is a reduction in the personal property. Is that correct? You've already done that on your tax return?
Tax returns are filed with the reduced values.
perfect world is you would hand us an appraisal and say, these are the values that we think they should be, and we could easily go with that.
That'd be nice.
Boy, any other questions?
I mean, my only question is, how do you assign the value? I mean, that's what I'm struggling with. You know, the reduction asked for. How do we know?
It's reasonable. Yeah.
I mean, it seems reasonable, but without an appraisal, I don't know how you do that.
Yeah. You see the dilemma we're struggling with, right?
That's awful. I agree
Yeah.
with you. I agree with you. You know, that's something that we face in situations like this. How do we assign values? So we do.
You bet.
And in this case, it's way overshot, way overstated. Yep.
There was benefits for doing it that way. I understand that, though, too. Typically,
from a
we want
tax-
more to the real property because that would be depreciated down. Your property tax bill would go down in theory because those assets are depreciated each year, and the more that's assigned to the real property, that will go up at least 2%, probably more realistically. So to me, I was struggling with that. Well, why are we even talking with this? If the value could have been shifted, your property taxes would have went up if we were shifting value from real personal property to real property.
Sure, but it's more reasonable and more correct. And we actually put about half of that on the land, I believe, on that pasture. So we put it on land which you know, land has value, probably from a property tax standpoint, from a income tax standpoint, because that's obviously something that's accountants chase also. It has no value whatsoever. You can't deduct it.
Till it's sold, right? Yeah.
From a income tax value, they give them up a lot of tax benefit by taking a lot of that value off of the personal property. So we certainly don't have a tax benefit in doing this. You know, the other things that jumped out were some of those large pieces of equipment that were never on the dairy when it was purchased, even though it was on the list that I used. Mm-hmm. And that's our dilemma.
Yeah, and that's what we faced before, where something was on the report, so you report it that way, and it's actually gone. Well, you'll receive the benefit when it actually gets taken off, and you won't be assessed those values on that property anymore once it's removed, potentially.
Right, true. If it was, okay, it's that whole communication thing. If it's communicated to us and things,
I understand.
what happened, it took it off and all that, and sometimes the communication is
right. Comments, additional comments from the assessor's office?
No. Mr. Morris, I would imagine that had the values been reported back at the time of the transaction as they are being reported now, and if the real property appraiser had established base year values based on a residual value, whatever is left over gets assigned to the real property, I would imagine the applicant would be challenging those real property values today. But because of what was reported, the real property values are, the base year values are reasonable, even in today's market. They are not subject to being challenged. How you have the opportunity to determine what those business property values should be reduced to.
You don't have an appraisal with you.
Oh.
Um,
We could go and get one if that was the case. After the fact, we could have some, equipment appraiser. They're hard to find.
Yeah.
Somebody who'd actually come in and try, come up with their value. It's just
Sure.
hard.
Yeah.
What value do they use? Yeah.
I'll look to my board members for what they would like to do from here on out. If there's no additional comments from either side.
Nope.
Would you like to make a ruling or a suggestion, or do we want to take it under advisement? What would be
Obviously,
your...
paid too much for the property.
If that's the case, I guess we did. The next couple of years when the downturn of the industry came, we really thought we paid too much for the property.
Yeah, absolutely.
Yep.
I have
Right after this.
No more comments on it. I think we take it under advisement.
Okay, Matthew?
I'd say take it under advisement.
Okay. We will take this under advisement and have a ruling to you within 30 days, 60 days? Barbara, what do we usually... 60 days? Okay. Was there findings requested, or not requested? Okay.
Not requested it by the applicant. The
Right.
assessor has a standing request.
Exactly, yeah, I understand.
Would you like us to try to find somebody to appraise it? Equipment? Would it help?
Would you like to have it appraised and come back before us? I think that would substantiate your claims, wouldn't it?
Would it? If that's what it would take, sure.
Why don't you go ahead and have it? I would think
Is
that
that-
have an appraiser.
You just took it under advisement. Are you reopening the hearing?
Yeah, that's what I'm wondering.
You'd have to reopen the hearing to allow him to do that. I mean, you can say that is actually in your discretion at this point.
Ms. Langley, she wants to say something.
We've had our hearing. The Van Graus are represented by a professional who's certainly familiar with Marshall and Swift and familiar with the need for an appraisal. So at this point, we've gone through this, and there's been no evidence presented. There's simply been a request to consider it, but no evidence supporting that, and you've indicated you're taking it under advisement. They had ample time to get an appraisal or some kind of valuation to submit to you. So at this point, I'd ask you continue on your indicated course and take it under advisement.
Take this under advisement then.
Okay, so we'll not reopen the hearing. Okay, no additional evidence will be received.
Do we need a motion for that, or?
No, we're fine.
Okay. We will take it under advisement and have a ruling to you within 60 days.
Thank you so much.
Thank you.
Appreciate that very much. Thank you.
Okay. Let's move to item number 15. We have some postponements stated before that. I don't see anybody else in the audience.
We had number 14, has that been withdrawn?
That has been postponed.
That's a new
Yeah, so we'll approve all this postponements all together. I believe we do have a STIP. Is that correct for number 15?
Yes, we do.
Okay, let's hear the stipulation.
The assessee is IGT Inc. Application number for lien date 2009 is 2012-00751. Assessment number is 810-013-080-000. The personal property stipulated value is $1,624,790. For the 2010 lien date, the application number is 2012-00752. Assessment number is 810-013-080-000. The stipulated personal property value is $1,202,483. For the 2011 lien date, the application number is 2012-00753. The assessment number is 810-013-080-000. The personal property stipulated value is $591,223. For the 2012 lien date, the application number is 2012-00754. The assessment number is 810-013-080-000. And the stipulated personal property value is $707,618.
This was the gaming machines at Table Mountain, Eagle Mountain Casino.
Eagle Mountain.
And so we've had a stipulation read in. Do I have a motion to accept the stipulation as stated?
I'll make a motion to accept the stipulation.
Do I have a second?
I'll second that.
All those in favor? Aye. Any opposed? Motion carries. Thank you.
And I will indicate for the record, we had heard evidence on this case, and so if we were continuing the hearing, we'd have difficulty because it was a different panel. But since all we're doing is approving the stipulation, I think it's appropriate for a different panel to go ahead and do that.
I believe I was the only sitting member on that panel that's here today, correct? Yeah.
I've got Morris and McKinley list. I'd have to go back and look at the notes to see who was the third
It'd be
member.
Mr. Azunian.
Probably
I
Mr.
believe,
Azunian, yeah.
Okay, so under our non-confirmed attendance, 16, Kenneth Fields. I don't believe anybody's here representing Mr. Fields. Number 17, Levon Ferris. Nobody here for that as well. And then number 18 has been postponed. So it looks like we have 17 and 18 are non-appearances. We'll take care of those first. Do I have a motion to deny applications number 16 and 17 for non-appearance?
I'll make a motion that we, 17 and 19, was it?
16 and 17.
16 and 17.
17 for non-appearance.
Second. All those in favor? Aye. Motion carries.
So I'll just comment, the ones that have been postponed by the clerk, you don't have to take any action on.
And that would be items number 12, 13, 14, and 18. Is that correct?
That agrees with my list, yes.
Okay. Candace, that's good? Okay. So it looks like we're dealing with items number 2 through 9, item 11, and our withdrawal calendar are all stated as withdrawals. Do I have a motion to accept items number 2 through 9, 11, and the withdrawal calendar as withdrawn?
I'll make a motion that we,
Do I have a second?
Second.
All those in favor? Aye. Any opposed? Motion carries. That leads us to the end of our meeting, it appears. I don't see any other items that we need to deal with on the agenda. We can go into closed session and discuss item number 10. With that, we are adjourned.
thank you.
Thank
Have a
you.
nice day.
Thank you, Board.
Thank you.
Have a nice
Good. We'll reconvene our meeting for November 17th, 2014, after being in closed session, discussing agenda item number 10, Robert Van Grau. And do we have an opinion from the board?
I rule in favor of the assessor.
Okay. A second?
I would second that.
Okay. Any further discussion? All those in favor?
Aye.
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 Any opposed?
Now, Madam Clerk, are we okay without dollars on that? Because they didn't particularly give us dollars. Okay.
So they'll just leave the escape assessment as is. Okay. With that, Meeting is adjourned.
That was quick.
Very much. After when I saw that original agenda